what a beautiful morning. Oh, what a beautiful day. I've got the funniest feeling. The DAX is gonna pay me all day. Well, hello. We're gonna have a quick look at the DAX. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers, and I am the vocal talent that is the Scruffy Trader. And I do say that with very inverted commas. I do like a sing-song. Kind of puts you in a good mood. And moods are one of your important things for trading, believe it or not. See, if you're in a bad mood, you'll lash out at the market. And if you lash out at the market, you'll find out it's like getting into the boxing ring with Mike Tyson in his time. There's only one of you going to be smiling at the end of it. And trust me, it won't be you.
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed.
Yeah, the markets can be very cruel. They have no memory, and they will chew you up and spit you out and not even blink. So you've got to be a little bit careful. And the way to be careful is with your mindset. So get yourself into a good mindset. Sit down, chill out, relax with a coffee. I certainly relax with a coffee because we all know Scruffy likes a coffee. And why is that? Because it helps me chill. It also gives me time to see what's going on. And that's kind of some of the advice I want to give today. Time. Time is your best friend with trading. And patience. Well, patience is time. It's that waiting. And it's letting candles close. Now, it's currently 10 to 9 in the morning. Just sort of done a morning watch for the Scruffy Squad. And in that morning watch, I was talking about the indices dropping down and how it can give a good opportunity, and what goes down must come up. And that's kind of the play that I'm taking today. And I'll flip the screen on and I'll show you what I'm talking about. So you've been watching the DAX, and as you can see, it has just thump. Down it has come. But that can create a good opportunity in itself, an overextended candle. Because it can tell you a lot about what's going on in the markets. And I know you go, what? How's that? Well, look at it. If there's all of that selling pressure, that means there's volatility. And volatility is what we need as traders. Because if you're trying to get trades out of that lot, it's hard work. You know, you want nice big bodies. So if you can see that and you think, right, I'm going to buy into that, look how far that market moved. It went quite a way. Likewise, you can see I'm going to sell into that. How far is that going to move down? Move quite a way. But what it can also do is it can retrace quite a way, come back on itself. And that's what I'm looking at this morning. Now, it's currently 5-2. I'm going to start watching it, and the game on this, because it is such a drop, I'm going to look for the bounce. So if it can get to maybe this level here, excellent. But I want to see it close. I want to see what the candle has to say for itself, because if it goes off on its journey again, in other words, the move has not finished, then I have to wait. And I'll wait till 10 o'clock. Then I'll have a look to see what's going on. Patience. So I'll leave the camera running, and you'll start seeing orders drop in, etc. I will be dropping through the time frame. There's no point doing a multi-time frame analysis on this morning. because it's this particular move that I'm interested in. Now I have worked it out already, which is here, and it's telling me to buy it, but it's also telling me it's slowing. All right, so the DAX is a buy today, but it's slowing. So what I have to be is cautious. All right, so it's not going to be swinging for the fences. I don't swing for the fences anyway. But if I can get 20 pips out of this, you know, 20 pips, 5 or a point, happy days. You know, you make some money out of this. And I'll start looking to see if I can get my wages out of it. And if I can do it with one go, result. Because that's the other side of trading. Trading is not about being a slave to the machine. For all I am here quite a lot, and I do enjoy it. It's about giving you freedom to do what you like. It's a beautiful day outside. If I can get my wages in this morning, I've got the rest of the day to myself. Okay? And that's the beauty of what I do for a living. You know, job and knock. I don't swing for it. I get what I need, and then I'm done. And I can enjoy time, spend time with things that mean a lot to me. You know, so go join Winky in the garden. Anyway. So I'll let this run. You'll see the orders come in, and then I'll come back to you at the end. Okay guys, this is pushed down, so I'm going to leave it till 10 o'clock. I'll pick this up when I get in the office, because there's no point you just sitting there watching the candles move up and down for the next hour. It's just not ready yet, so that's what we'll do. So I'll just pause it now, but when I go into the trade, it'll be a seamless move. But I am looking to go to the upside. Okay.
Well, we're waiting.
Okay, guys. I'm down at the office. It's currently 10:30, and what I'm going to do is it's getting pretty close. I've been watching it for the last half hour, so let me flick this over. And you can see that it's come into a little box that I've marked up as an area of interest. And what I want to do is I want to see it break this line. Okay. And once it breaks that line, I'll then be looking to trade this up, possibly into this area. That's the general idea. Okay. And it's coming in now. So if I drop this to a 5-minute chart, what we can see is very simple. There's the drop off. There's the consolidation. And here is the move. Okay. So what I'm going to do is I'm going to start placing some orders in just above this candle here. I can't do a candle count because this is the highest candle count. So I'm going to base it on the top of this zone that I've marked in. Okay. So that's what we're going to do. Just clean this down a second. Let's have a look. Dum, dum, dum. So we're going to be buying the market. I'm going to start it with 2 orders. Just like so. And the idea is to be in for the retracement coming up. So I'm going to set one kind of roughly about here. And the other one is going to be in the middle of there. Now the idea is it might catch one. We'll place the order back in, but we're going to trade it up into this zone. Okay. And hopefully it'll be a winner. So there we go. I'll just let it run and I'll come back to you at the end. Okay guys, I'm kind of left with a decision now. It's whether or not to close this off or let it continue. And why is that? Because it's kind of flattening out and it's getting up to where I wanted it to go. So if I put it onto the hourly, you can kind of see what I'm getting at. That is the retrace that I was talking about. It's now 1 o'clock in the afternoon. It's already closed out some positions and I left the runner. Now that may well continue to move up, and if it does, I mean, we can see it here, it's pushing, but that's what's caught my eye, this candle here. And that's because there was a lot of selling pressure down, but the buyers are still there. So you're kind of left with a decision of, well, what do I do? Well, what I'm going to do is I'm just going to let it run, but I'm going to trail the stop up behind it. So we'll pull the stop up to that level there. It just means I'm not giving all of the runner back, and that's what that's for. But rather than sort of let you sit through wherever it's going to go, you can kind of see the process of what I was trying to achieve, and what you're looking at. It's all real time, you know, because I don't like rollback charts. If I ever trade in front of you, it'll be a real time chart of the moment. And that's what I want you to see, because when I press the button, I've got as much idea of what's going to happen as you do. And I think that's fair. So what we're going to do, I'm just going to let it run. And we trade similar products all the time, so you'll be able to kind of trace where this trade has gone. I'm currently risk-free at 57.11. Okay, and what I'll do is I'm going to target roughly the baseline of here, because if it's going to push up to levels, it's going to visit this first. because that's where it kind of fell off the cliff, which is there. And it's also about 150 points, which is the upper end of the ATR. So it's all good. It all kind of marries up. And all I'll do through the afternoon as it's going, when it breaks through this level, I'll pull it up to halfway into here. When it breaks that level, I'll pull it up to there. And then I'll just let it run in. Okay. So nice, easy way to do my afternoon, if you like. So that's that. So what's kind of the moral of the story of today? Sometimes you don't have to chase the markets. Like I said this morning when we were first looking at this, I'll wait. And I waited quite a considerable time to let the market settle itself down. And once it did, I kind of figured out it wasn't going to push down any further. How did I know that? Because my levels were in place and my levels were key. I had an entry point that was clearly defined. And then I just let it do its magic, because what goes down must come up. And what goes up must come down, sort of thing. It's where the market works, up and down like that. And if you ever see a strong directional move, certainly like what we saw this morning from late last night, it has to retrace on itself. It's got no other choice. How far it'll retrace is the question, you know, but it will retrace, because you're going to have traders caught on the wrong side of it that are going to be getting stopped out. That'll slow the market because stop orders become buy orders, all that sort of thing. And then, of course, you've got the traders that did see it, and they'll be taking profits. So it has to retrace. It's just the way the market works. And anyway, there we go. Sorted. So I'm going to enjoy the coffee. I'm going to terrorize the Winker, who has been skiving all day today. She left me in this place on my own all day.
I was at hospital.
It's not an excuse. But she did bring me a Greg's in and a pasty, so we'll let her off. Anyway, there you go, guys. Do it all again tomorrow. There may be a change in format, actually, over the next couple of months, or certainly this month. Because we were discussing with the Scruffy Squad about the merits of trading one market only. Instead of scanning across all 28 pairs, however commodities there is, all the different indices, but just trade one market. So we'll keep an eye on that, and I'll be interested in your thoughts on trading multiple markets versus single markets. Just a thought, something to open up a discussion. Anyway, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all on the next one.